Okay, so this is the syllabus that we are going to share, okay, or that we are going to do. So to start with, for the year 2023 this year, 2024 and 2025, the exams are available in the June and November series, and the exams are also available in the March series. That is just in India. But if you're not in India, then you can write June and November series. So most likely you're going to write the November series. And so this is going to be the syllabus that we're going to follow. And let me just show you now what you're supposed to know, what you're expected of knowing with the Cambridge syllabus. Right. So about the content overview, So to start with, you will need to learn about the fundamentals of accounting. Okay. This section actually will introduce the subject by explaining the difference between the bookkeeping and accounting, and the role of accounting in providing information and the purposes of measuring business profit and loss. Okay, so the basic accounting terms and accounting equations are introduced right in this unit. Okay, that's the first thing that we have to learn. And then we'll look at the sources and recording of data. So the core topics of this section is just the double entry system of bookkeeping. So we'll basically introduce you to double entry system of, bookkeeping, and we'll show you how it is applied in the preparation of ledger accounts. So the division of the ledger is considered just in this unit, and the business documents and their uses, okay, as the sources of information are explored. That's what we're going to look at, and we'll also show you how to record, transactions in the books of prime entry. The books of prime entry are also called the books of original entry. That is how we call them. We call the books of prime entry, and that's the books of original entry. Then we will verify the accounting records. That is the third thing that we're going to do. Under this section, we will concentrate on the use of the trial balance. Don't worry, you may be new to these terms. I will introduce them to you when we start, then you will know what really a trial balance is. Okay. And the bank reconciliation statements, the control accounts. At this time, we introduce you to the bank reconciliation system, the trial balance, and the control accounts, okay? And we'll also show you the procedure for the correction of the errors, okay? So within this unit, so that these are the things that we talk about in the second unit, third unit. Trial balance, bank reconciliation statements, control accounts, and the correction of errors that occur as you are recording, as you're making entries to these transactions. What happens is that you make some errors. Some accounts may make errors, or accountants may make errors, and I should be able to show you how to correct those errors in the times that they occur. What do you do as an accountant? We'll show you those. And from there, we'll move to the accounting procedure. Now, under this one, we'll try to consider the importance of distinguishing between capital and the revenue and the receipts, right? Capital, revenue, expenditure, and receipts. We introduce you to the concepts of non-current assets, and further, we'll introduce to you the accounting for depreciation and disposals. Here, you will learn that the non-current assets, they are also called the fixed assets. They lose value with passage of time. As they lose value, that value that they lose is what we call depreciation. So we'll look at the accounting of depreciation and the disposals of these non-current assets. Selling of a non-current asset is called disposal, right? When you are selling of the non-current asset, for example, you acquired an equipment, then after some time you decide to sell it. That is not called a sale, okay? We call it disposal. That is clear. Then we'll show you the procedure to record the adjustment for accrues and prepayments. By accrues, what we mean is that we mean those expenses or incomes that have already been incurred, right? According to some concepts, we need to record the transactions for the expenses and incomes immediately they are incurred, not when cash moves or when they are paid. For example, if you have the workers, right? They owe you, you have workers, they have worked for you, you need to pay them, right? You
Yes.
have to record in your books of accounting that I need to pay these workers because they have worked for me. Okay. But there is that time whereby you need to close the accounts, the books, before you pay them. So in your new books, you're going to indicate that we owe these people, right? So you
Yes.
record the accruals as expenses because they have already been incurred, no matter what you're going to pay them at some point. That's what we mean by accruals. Then by prepayments, what we try to mean is that you pay in advance, you know?
Yes.
If you pay maybe your workers in advance, we'll show you how to account for that, right? You pay rent in advance. A recoverable date. Now, what we mean by recoverable date is that there are those people that to whom you are supplied on credit, right?
Yes.
They are called the debtors. The people themselves are called the debtors. But the amount that they owe is called accounts receivable. It's called the
Okay.
trade receivables, right? The amount is called trade receivables. Okay.
Yes.
So now, what happens with the recoverable date? This is the date that cannot be recovered. You know, you're expecting some people to pay and make payments to you, but you happen to find that those people, maybe someone who owes you, they have died, right?
Yes. Yes.
The person has died, and you're no longer expecting anything. If there was no writing somewhere that you didn't sign somewhere that that person, if they die, you're going to get from the third party. Uh,
Yes.
so you forget about that money. So that is what we record as a recoverable date. We explore that.
Okay.
We'll look at the provision for of doubtful debts. Now, by provision of doubtful debts, this is just from the prudence concept. We know that even if people owe us money, there is that probability, you know, that chance that they may not pay all of them. So usually it is prudent for you as an accountant to provide for the allowance for receivables or the doubtful debt. So you just provide that. What if out of maybe the $500,000 that I'm expecting, maybe some people don't pay? So you just provide, you know, that element.
Yes.
You're not sure yet
Okay.
if they are not going to pay, but you just provide for that provision. So that is what is there. So we'll show you how to write off the dates. Like now, when you are sure that these people, um, you know, uh, are not going to pay you. So how do you record those transactions? These are some of the things that we do. And we'll look at the impact of all these on the financial statements in this fourth unit.
Okay.
And then on the fifth, on the fifth unit, we look at the preparation of the financial statements now. We look at the preparation of what? Of the financial statements. So the financial statements are prepared here now. By
Okay.
financial statements, these are basically the summaries of all the accounts. Okay, and that should be indicated in a statement form to detect or assess, ascertain whether the company made profit or loss. Okay, there is that time when
Okay.
you want to ascertain whether the company made a profit or loss. So you prepare a statement. We call those the financial statements. To be specific, there are four main statements that we discuss here. The first one is the profit and loss statement, right? And the other comprehensive income. The profit and loss statement and other comprehensive income. Other people call it the income statement. Okay. So this statement is just there to indicate to us whether we have made a profit or a loss. Okay. So we'll show you how to prepare that first statement. The second statement is called the statement of financial position, right? Financial position statement. Now, the statement of financial position used to be called the balance sheet, right? Formerly, it used to be called the balance sheet, but it's no longer called that. That's old, it's archaic. Nowadays, we call it the statement of financial position. That's the new language. Okay.
Yes.
So don't call it that. So the statement of financial position, formerly called the balance sheet, shall indicate to us the worth of company, like how is the financial position of the company, of course, as at that date that we have closed. Right.
Okay.
Now we know that the business entities are categorized into groups. So mainly in your syllabus, you're going to look at the statements for the sole traders, which are basically these people that are running the businesses alone, right? And we look at the partnerships, and for limited companies, that is what the syllabus requires you to do, to look at for sole traders, for partnership, and for limited companies. That is very critical and very crucial. You need that.
Okay.
You'll not just end there. You also need to consider the preparation of the statements for the clubs, for the societies, and for manufacturing businesses. I'll show you how different and how you make records in that. And then we'll also look at the entries, the incomplete records, right? We'll learn how to make the statements or how to extract the financial statements from the incomplete records. There are those records that are not complete. How do you prepare the financial statement from some information that's scanned? You don't have enough information, but just need to prepare the statements. So how do you prepare those statements? So that's what we're going to do basically in the 5th unit. Right.
Okay.
And so from there, we'll proceed in the 6th unit. We'll look at the analysis and the interpretation of accounting ratios. So basically, you have to learn now how to extract the information from those. Did I finish the statements? Sorry, on the statements, I talked about the statement of profit and loss, right? The statement of income, the statement of financial position. There is also the cash flow statement. The cash flow statement.
Okay.
And we have got the statement of changes in equity, statement of changes in equity, and this statement it falls under the limited company. So you learn all that. So we will have the use of the accounting ratios in the 6th unit. So the accounting ratios have got this focus. The focus thereof is just to look, you are given the financial statements that have already been prepared, right? All those, mainly the statement of profit and loss and the financial position, okay?
Okay.
They have already been prepared. So what you need to do now is to extract the information. There is a lot of information that is there on those prepared statements. So what we want to teach you now in this unit is to interpret and calculate the ratios from these statements that have already been prepared, right? So the statements have already been prepared, then extract the information, use the ratios. Right.
Okay.
So we will look at that, and that's basically what we're going to do. And then we'll explore even the limitation of the accounting statements we just within this unit. That is what we're expected of knowing, right?
Okay.
Then from there, the last unit, we will consider the accounting principles the policies, right? The accounting principles and the policies. That's the last thing that we have to consider. So the main accounting principles will be introduced together with how they are applied in accounting records and statements, right?
Yes.
Consideration is also given to the influence of internal accounting standards and the selection of accounting policies just within this unit, being the 7th unit, right? And that is what we are required of doing. Then what about the assessment overview, right? You can see that you'll have two papers mainly. The first paper will be paper 1. It shall be made up of multiple choice questions, 35 of them, right? There'll be 35 and the total weight is just 30%, right?
Okay.
And you don't worry about these questions. They'll be, they'll be based on all the syllabus content that we're going to share with you. Right.
Okay.
Then there will be the paper 2. There will be the second paper. This one above the structured questions, the structured question, and the total weight of this paper is 70%, right? The duration for paper 2 is 1 hour and 45 minutes. Then the duration for paper 1 is just 1 hour and 15 minutes. The questions will be based on all the syllabus content that shall be externally assessed. Right. So basically, these are the things that we're going to be looking at. There is nothing much more to suffer or worry about.
Okay.
Okay. Is there any questions so far?
No, not really, but I'm sure I'm going to go back and then I'll look again at the recording of the class.
Okay. Right. So basically, that's what you look at. So we will go in detail during that time, right? So
Okay.
to further the conversation under the fundamentals of accounting, we will look at the purpose of accounting. Here you will understand and you explain the difference between bookkeeping and accounting. You will state the purpose of measuring business profit and loss. You even explain the role of accounting in providing information for monitoring process and progress and decision making. Right. And then you look at the accounting equation. Then you explain the meanings of the assets, liabilities, and the owner's equity. And we even show you how to apply this particular equation. Right. I indicated that we also have time to look at sources of data and how to record data.
Yes.
So on the double entry system, we'll just begin by outlining the double entry system of bookkeeping. We'll discuss the process of accounting, data using the double entry system and prepare the ledger accounts. Then we'll show you how to post the transactions to the ledger accounts and how to just balance off the ledger accounts. Then we'll show you how to extract the trial balance at the end of it all. Right.
Okay.
Yeah. Then when we finish doing that, then we'll talk about the business documents.
Yes.
You should be able to recognize and understand the business documents, such as the invoice, the debt note, the credit note, the statement of account, and the check and the receipt. And when actually we use these documents, how we use the documents, even how to make entries in the same documents. Right.
Okay.
You'll have to understand the use of the business documents as the source of information. You'll have to understand them. Then we'll show you, all of them. Then we'll look at the books of original entry or the books of prime entry. Here, you will explain the advantages of the using various books of prime entry.
Okay.
Mainly, we explain the use of and the process of accounting data in the books of prime entry, being the cash book. These are the books, the cash book, the paid book, the paid cash book, the sales journal, the purchases journal, the sales returns journal, the purchases returns journal, and the general journal. Then we show you how to post the ledger entries from the books of prime entry. Then how to distinguish between and account for trade discounts and cash discounts. You should be able during this time to explain the use of record payments and receipts that are made by the bank transfers and those electronic means at that time. When we're done with that, then we'll verify the recording. We'll verify the accounting records. So here, we introduce you the concept of the trial balance. Right. So on the statement of the under the trial balance, just to show you how to prepare it, of course, from the T accounts, we'll show you how to prepare the trial balance from the given list of balances and just how to make corrections where necessary. Then how to correct those different errors that will happen in the trial balance, such as the error of commission, the compensating error, the complete reversal omission, the error of original entry, and the error of principal.
Okay.
Yeah. So when we are done looking at those and how to correct those errors, then you should be fine. Though still, we know that there are some errors that do not that affect the agreement of the trial balance. Those are corrected in the suspense account. So we'll introduce you to the concept of the suspense account and in how to make entries in the suspense account.
Okay.
Yeah, then we'll look at the bank reconciliation statements in detail here, where you are going to understand the use and the purpose of the bank statement. We'll show you how to update the cash book for bank charges, bank receipt, the bank paid, the interest that are received, those interests that are paid, and how to make entries even for the standing orders. Yeah. So that's what we're going to be doing.
Okay.
I indicated that we're going to look at the control accounts. So for the control accounts, what we're going to do is this is to understand the purpose of the purchases ledger and the sales ledger control account. Yeah. We'll try to identify the books of original entry, even as a source of information that we use in the control accounts.
Okay.
Right. Yeah. So that's what we do. Then we'll start the accounting procedure and show you how to make entries and account for depreciation and disposal of non-current assets, where we just define what depreciation is. We explain the reasons for accounting for depreciation, the name and describe the straight line, reducing balance, and revaluation methods of depreciation. Are they that are in the syllabus? Right. Then from there, you just prepare the ledger accounts and the journal entries to record, the sale of the non-current assets, just the one that I showed you and indicated platform. Right. Then we'll look at the other payables anyways, and then you look at the recoverable dates and provision for a recoverable date here. And once we are done looking at those, we will prepare, the financial statements in detail. After preparing the financial statements we'll start with the sole trader one, the financial statement for a partnership. We'll do for a limited company, for clubs and society, even for manufacturing accounts. Then we even look at the incomplete records here, how to look for the incomplete records. And we will analyze the financial statements. So these are some of the common ratios that are in the syllabus. The gross profit margin, the return on capital employed, the current ratio, the acid test ratio, yeah, the trade receivables turnover and the payables turnover, even how to just interpret this. So basically, that's what we're going to look at. And finally, we'll just look at the accounting concepts, right? The accounting concepts and the principles and the policies. Then at the end of it all, you should be ready for the exam, right?
Okay.